Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Tuesday, June the 8th, 2010. The Dow Jones Industrial Average made a little move today up, 123 points, and the Nasdaq was down about 3 points. Kind of a close and split fashion. We also saw the same thing in the overall world markets, with the FTSE was down and the Hang Seng was up. So let's have a look at the charts and see what's going on out there. If you watched our nightly market analysis from Monday, the 7th of June, you were instructed on how to spot a market bottom. And as you can tell today, we get out the tools here, we do not have a bottom, not a strong one that we want to cover our shorts and go long on. What we have here is a little bit different. First off, how do we know it's not a bottom? You can go back and watch the analysis from last night and get more details, but for now, just a quick overview. This is not a hammer formation right here, today's candlestick formation. It's a reversal. Obviously, it's a bullish engulfing, and it is we'll talk about that in a second, but it's not a hammer. This is what a hammer looks like. It's like an actual hammer, just sitting there, and that's how you spot a reversal. But it has to be confirmed with volume. That's the case with everything. Price and volume must be taken together. A while back, when we were in this situation, I think it was here and here. Can't remember which one of these was, but somebody commented that we had a bullish engulfing signal, and it was time for the market to rally. And we said no, and they said yes, and we said no, and they said yes. And the reason why we said no and we were right is because the price activity was not confirmed by volume. If you have a situation here where this is a down day, right, and then the following day was a big old bullish engulfing, quote unquote, the volume should support that. In this case, that's not what happened. You have, let's see, 1, 2, 3, 4, 1, 2, 3, 4. Okay, here's your sell day right there, marked by that red candlestick or that red arrow, and then here was your buy day, the following day, and that's not right. Here's the buy day right there. Okay, and it's basically less volume than the previous day. So it's not an engulfing pattern on the volume, and therefore it's not an engulfing pattern to be trusted on the price. Okay. In today's case, we do have the actual bullish engulfing that that guy was trying to say we had before. You notice here that today's volume is buy volume, and it is above the previous day's sell volume. Makes perfect sense. That means price should actually close above the previous open. Okay. That makes perfect sense. That's what we got here. But all this tells us is we could have a bounce. That's it. It doesn't say that this is the bottom and we're not going to go any lower. In fact, I'm going to argue otherwise in a moment. But for now, what I would do is, knowing that you can't have a bounce, you do have some oversold indicators out there, which is going to cause some bounces along the way. And what you want to do is, anytime she comes up to the middle Bollinger Band line, you want to short. Okay, that's what you do. All right. Go look for your charts out there. Look for the same condition. Look for stocks that have already bounced or are floating near the middle Bollinger Band line. Short those guys. Those are the ones you want. Let's have a look at the NASDAQ. Okay, this is the NASDAQ, a 6-month chart. Each one of these candlesticks is 1 day. You'll notice today someone's going to say this is a hammer, and it's not. I mean, it's a hammer formation, but like I said before, hammers can be classified by strength, and this is a strong hammer formation. Okay, see, nice bullish day. The open was lower than the close, and in this case, you have your close lower than your open, showing that there's still a lot of sell volume mixed in there, and you see that as well as the red sell volume here. So I'm not going to be a bull here. Not going to call this the bottom. It is not the bottom, and you know that because if you move on down, look at what we were talking about before. Note these low points here. Okay, right here and right here. Right, it shows a downtrend. This is higher, showing an uptrend. The price is lying to you. Okay, well, this would be the new low. The price is lying to you. It actually needs to do this number, the same thing that this has done. Okay, and that means you're going to take out this 2100 level. Okay, this 2100 level, and Nasdaq is going to be toast. You're going to break through that. You've also got it confirmed on the RSI indicator right here. So stay short, and if you get any bounce, short at the middle Bollinger Band line. Very simple process. That's where bears find their strength on downtrends. Let me show you right quick. Right there. See that there? Right there. Yeah. Okay. And these averages are made up of many stocks. So go out there, find your stocks, and we'll provide one every night and show you, the best entry points are at the middle Bollinger Band line, plain and simple. Okay, after you've no stock or no market falls straight down, you're going to get bounces along the way. The key is to know, are we in an overall downtrend, which in this case we are, and therefore any bounce you don't want to be going long, you want to short it. All right, stay short, stay strong, make that money left and right. If you haven't been to our free website at perfectstockalert.com, man, you're missing out. We have called this thing absolutely perfect because we're perfectstockalert.com and no one can do what we can do. So join us. Don't fight us. It's 100% free. All we ask in return is you refer a friend. Tell somebody, anybody, to go check out perfectstockalert.com. They're absolutely insane, but they're dead on right, and they're making tons of money. Let's look at our disclaimer. Hang on. Before we look at the disclaimer, let's have a look at gold and the FTSE. Here we have the FTSE. This is London's Financial Times Index, and you'll notice the same exact conditions. The bounces get nailed at the middle Bollinger Band line. Okay, boom, 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 boom. And this one kind of came close. But anyway, yeah. So when the closer they get to the middle Bollinger Band line, the more you want to short them. Plain and simple. Okay, okay. How about gold? I've been getting a lot of questions lately on gold. What do I think? Bullish, bearish, etc., etc. I'll keep going over this from time to time on you. And if you have any stock or anything like that you want me to look at, just post a comment to our videos, and I'll grab one or two of them every night and see what I can do for you. Okay. Um, as always, this is my opinion. Okay. So basically, we went long here. We saw the breakout. We said it was a good time to go buy. We told you the resistance was here, and that's where she came up to. We thought she would consolidate at this level. We told you could take profits here or set a tight stop. Down she goes. And then we told you there was another opportunity in here at the middle Bollinger Band line to go long, and up she goes back to this resistance line. She was going to test that again. That's exactly what happened. And now she's made a new high. Oh, right. That's awesome. Okay. What does it mean? Well, the same exact thing is working on this gold chart. There's fundamental problems with the currencies and the debt around the world, and so it's driving strength to gold. If other governments out there do nothing, gold will get stronger as these other currencies and other countries start to default, and that would cause a flight to gold. If they turn around and they print a whole bunch of money to backstop these problems, well, that just makes gold look better compared to the currency that they're devaluing. So you can see that gold's got a strong floor in it right there. Okay, so what we're probably going to get is a lot of consolidation at this level. You can have more, like I said, consolidation at this level. But if anything really breaks out really bad over there in the Europe situation, which we believe is going to happen, like we said before, this chart, I'm neither bullish or bearish on it right at this moment. I like to buy on the pullbacks, find myself a good little hammer, and see it confirmed and then move higher. That's a good opportunity to buy or break or something like that. Right now, you can move higher, but a lot of it's going to be just fear, basically. Fear is going to drive up these prices. So I would not short gold, plain and simple, based on the fundamental elements out there. There's no reason to be shorting gold, okay? And I would probably buy on the dips as opposed to, when we're breaking new highs kind of thing. But, I think there's potential here for this thing to go much higher. So, if you got a chunk of gold in your pocket or if you're into this kind of thing, just set yourself a stop and ride it out, okay? Awesome. That's my opinion. Let's have a look at the disclaimer. The disclaimer. You can read. Okay, I'd like to thank everybody for their support, for sharing our videos online. That's pretty awesome of you guys. I really appreciate that. When you show you guys the support, it just makes me want to work that much harder for you. And I've already made you quite a bit of money, and it's awesome. I love hearing that feedback from you guys saying thank you and I've made money and all this stuff. That's just cool. It makes my day. It makes what I'm doing here well worth it. So thank you very much for all your support. All you out there who have been subscribing to our YouTube channel, I appreciate that exponentially. Please continue to do that. Share our videos, refer your friends, etc., etc., etc. Okay, let's go make some money.